Hey everyone, thanks for joining us back for the October 2024 Arca crypto market call. I'm Jeff Dorman, CIO of Arca, joined today by Joey Reinberg, one of USC's own graduates of Blockchain Academy. I don't know if that's a real thing, but he was a USC grad, took a lot of blockchain courses, now at Arca. Happy to have him. Joey, thanks for joining.
Yeah.
For those who don't know, we do this every month. I came from the investment banking world 25 years ago before, information was ubiquitous. One of the firms I worked for, Lehman Brothers, back before it was a horrible name, was actually a pretty prestigious firm. And they did a great job kind of walking through what was happening in the equity and the fixed income markets. Shout out to Rick Reeder, now CIO of BlackRock, who was running these calls. I loved them. The feedback was that they were great, a really good way of explaining what's happening in the markets. We feel the same way about what's happening in crypto right now, which is similar to kind of fixed income back in the early 2000s. There's a ton of data that most people don't really know how to extract themselves. And market participants, in my opinion, are now savvy enough to understand the nuances of crypto and want to know how to get deeper in the weeds like we do running a crypto fund. So we hope these monthly calls will help educate all of our investors and friends who want to find the tools necessary to learn more about this space. So before we continue, a quick disclaimer. As always, this commentary is provided as general information only and not intended as investment advice. So, Joey, again, thanks for joining us. Let's get into the weeds here on what is happening in the market. And I think historically, we talked a lot about macro because, quite frankly, for the last 6 months, macro is driving everything. But feels like we're turning a corner here, starting to get a little more idiosyncratic information happening in the crypto markets, specifically happening on certain chains. And let's kind of walk through that, looking specifically, let's start with Base. What is happening with Coinbase's layer 2 base and why are we seeing some of this explosion? And where are you finding opportunities within that ecosystem?
Yeah, so Base launched around a year now, and when it launched, Uniswap was the dominant DEX, which you can see on the chart. And over the last 5-ish months, Aerodrome, which is a new DEX on Base, has really overtaken Uniswap. And Uniswap is the dominant DEX on most other EVM compatible layer ones and layer twos. But Aerodrome specifically on Base has really taken over a lot of the mind share and DEX volumes.
Yeah, and I think what's interesting there is as an investor for decades here, I always say it's really easy to come up with an investment thesis. It's really hard to come up with the best way to express that. And I think the problem we've seen with Ethereum is for the early parts of the crypto's rise, ETH was the best way to express a bet on the Ethereum ecosystem. Then we got DeFi, then we got NFTs. And then ultimately we had all these layer twos and Arbitrum and Optimism, not great tokens to invest in the sense that they have massive inflation. They don't really accrue economic value. And then here came Base, and Base doesn't even have a token. So we're like, all right, well, how do you play as an investor some of these themes? And Aerodrome is really interesting, right? Because most successful chains that have really kind of taken over some mind share have a functioning DEX in some way, shape, or form. So the fact that the Aerodrome token exists is it's no secret why Aerodrome was up 94% last month. It really is kind of the only way, other than Coinbase stock right now, to play as an investor the rise in Base. So moving on to the next slide here. The other thing I guess that's worth noting is when you look at some of the other chains, you've seen sort of the rise of Tether, whereas on Base, really most of the volume is happening on USDC, right?
Yeah, and that I think has a lot to do with the partnership between like Circle and Coinbase, and they're really promoting USDC integration within like Coinbase Exchange, within Coinbase Wallet, and a lot of those integrations are directly tied to Base usage.
Exactly. So Base is doing great. That's, most successful layer two, certainly in Ethereum, but obviously that's not the only ecosystem. Heading to the next slide here. Solana continues to grow, even though the token itself, the Solana token has sort of been stuck. There's been a lot of talk about how the ETH token has been going nowhere. Realistically, ETH and Solana have both been going nowhere recently. Bitcoin has been outperforming both, but there's no question we're seeing some real growth on Solana still. The question is this meme coins are driving the growth. Is that fair to say?
Yeah, there's some real products which we'll get into on the next slide, but most of the volume and growth has been trading meme coins.
So when you think about Solana, and Solana certainly a lot of people view it as the fastest horse, in terms of growth. Certainly has had a lot of success in other areas, like we'll get to besides just the meme coins. But how serious are investors supposed to take this rise in meme coins? Is this something that's going to be a flash in the pan, or is this something that has real legs to it? When you see a chart like this, I mean, do you dismiss it, or do you say no, this is real? This is just one of many things being built on Solana?
Um, I would say this is just like the tip of the iceberg. If you watched a lot of what was coming out of Singapore and the Solana Breakpoint conference, you could see that like payments, DePin, and DeFi are really like being explored on Solana. Just in its like current iteration, most of the volumes and what's taking up block space is actually meme coins. But in the future, it's set up in a way that like this will eventually be real and legitimate products, in my opinion, being used on Solana.
Yes, let's move to the next slide here then. So looking at some of these, we mentioned that every ecosystem that grows has to have a DEX. You're looking at Jupiter there, maybe to some extent Radium, but also, you have staking with Jito. I mean, what else is exciting here that you're looking at in the Solana ecosystem? It's
Yeah,
just
so Radium is the actual DEX. Jupiter is an aggregator that most people use that gets people the best price. Jito is a liquid staking token as well as they do MEV stuff to rearrange block space. Camino is a borrow lend similar to Aave. Metaplex is NFT pretty much programming. Drift is a derivative DEX. And Helium is a DePin project. So I would say like DePin is definitely where I'm most excited on Solana, which we'll get into a little later. But DeFi and other applications that are on other chains as well are definitely being explored on Solana.
Yeah, absolutely. And those are real revenue numbers there. You can see at the bottom for those who have pretty good eyes, you can see the revenue multiple there in terms of what the token is trading at relative to the revenues. And you can see they're pretty high multiples. So a lot of growth still baked in to what Solana ultimately will do here. So moving on here to the next slide, I think one of the newer comers, not in terms of product, but in terms of kind of being thought of as a real crypto product. Telegram, what started as just a messaging app has grown to almost 1 billion users. And now with the Ton protocol, really starting to drive some product growth as well. Makes sense, similar to what you talked about last month, Joey, when we were talking about how Coinbase and Base have such an advantage because it's so easy for developers to just plug and play on the API of Coinbase and their 60 to 100 million users. You got Telegram basically doing the same thing, which is they have 1 billion users, and now you have all these apps being developed within the Telegram protocol. Showing the growth of on-chain wallets here. Most of this is games at this point, right? Or are there other apps that are really kind of driving this growth?
There's a few social-based apps that kind of integrate with your chat and other social mechanisms of Telegram, but most things are click-to-earn games right now. But I think that's going to change quickly in the next 6 months. Is like at least on the venture side of Arca, we've seen 1 million pitch decks on different games, on different DeFi dexes, on different products that could also exist on Ton.
Yeah, and would it safe to say, I mean, is that the right parallel that I was drawing? What Coinbase is doing in terms of making it easy to build and tapping into the user base, Telegram is doing the same thing, or like
I would say it's a little different because Coinbase is focusing more on the developer side and well, Telegram's more on the consumer like user side because they're making it really easy for people to spin up wallets, for people to not have to leave the app and just integrate with their friends and contact list already within Telegram. When Coinbase is making it really easy to transfer assets from the exchange or for developers to build applications that people can actually use in an easier way.
Right, that makes sense. And Telegram, one of the other best performers. So when you're looking at kind of year-to-date performance, it sort of makes sense. You have things like Aerodrome driving the growth of Base. You have things like Solana and the meme coin growth. You have now Telegram. So these are, not surprisingly, some of the best performers. Getting into the next slide here, though, in terms of, where the worst performers are, there's been a lot of hate on Ethereum. Both as the token has underperformed this year, but also just in terms of the value going forward. And a lot of that is just because it's sort of counterintuitive, right? There actually is massive growth on Ethereum, but it's stripping away from maybe the value proposition of Ethereum, starting with some of these growth in layer twos. So looking at this slide and as we get ahead here in a minute, like what's happening with Ethereum? Walk us through the L2s, the data availability, and kind of what you're seeing from a data standpoint.
Yeah, so how the layer two, I think with Ethereum in general, you have to think about the L2 ecosystem as Ethereum, and you have to think about the ETH token separately because the Ethereum ecosystem is growing rapidly, but ETH, the token, is struggling because as these L2s proliferate and all these new ones are being spun out, they're only posting a small proof back to Ethereum to gain Ethereum security, and that fee they're paying is minuscule compared to what people would be paying if they were actually paying gas on the L1 itself. So, as you can see in term the like at the bottom chart, the Ethereum revenue numbers have just been decreasing, and at a certain point, Ethereum actually became inflationary again instead of deflationary, and now it's back to deflationary, I believe. But you're seeing these L2s that are driving down because on the L2s the fees are minuscule. So people in general are just paying significantly less fees to the L1 and it's driving down ETH's revenue greatly.
Right. So as you mentioned, like great for Ethereum, you want lower fees, right? And that's sort of the as investors, that's what that's why Coinbase trades at such a low multiple. That's why Robinhood stock trades at such a low multiple because everybody is afraid of any fee-based business that ultimately fees go to zero. But from a consumer standpoint, you want fees to go to zero. So as you mentioned, thriving for Ethereum, the ecosystem, not great near term for the ETH token until you have a lot more volume that makes up for those lower revenues. And go further in this on the next slide here. A lot of new tokens out there, probably with concepts like data availability that most investors don't understand. Like, what are you seeing here? How do you think through all this?
Yeah, so data availability is a lot of L2s are using Ethereum for data availability, but there's different options now. You can use Celestia, you can use EigenDA, which just launched, and basically you're posting your data there so that it's easily accessible. And Celestia is one of those new shiny tokens, and they've seen exponential growth in terms of data being posted to Celestia in the last 3 months. And in the next 6 months, a lot of new app chains and L2s are launching that are going to be using Celestia for data availability. And this is also just lowering the ETH revenue number at the end of the day.
Sure. And moving forward here with Celestia as well, same thing on the next slide here.
Yeah, so this is just the kind of market share that Celestia is taking away from Ethereum. So you can see how it's eating into Ethereum's profit. And now that Celestia is taking up around like 50% of the data availability landscape, and that's been increasing over the summer a lot.
Yeah, and moving ahead even again here, looking at the growth of restaking with Eigenlayer, again, it's hard to deny that everything regarding the Ethereum ecosystem is growing. I guess the question is, if you are a Ethereum builder, you obviously care about the growth of the ETH token as well for overall security. I assume this wasn't the plan to have all of these different pieces of the stack taking revenue and taking market share and taking mind share away from Ethereum, but it seems to be playing out that way. Like, what do you think the long-term path is here based on the data you're seeing with the growth of Eigenlayer, the growth of Celestia, the growth of just in general L2s? How do you see all this playing out?
Yeah, I wouldn't say this wasn't always the plan. Like Vitalik, when he created Ethereum, knew that it wasn't going to be scalable and came up with like the L2 scaling thesis that he laid out over a 10 or 15-year roadmap of how he was going to implement and grow the ecosystem. So I think it's just like kind of like the short-sighted answer of this wasn't always the plan and this wasn't always part of the like issues with implementing this plan is the plan to truly scale Ethereum is a 10 plus year plan, and Eigenlayer and L2s and all of this and interoperability standards are all part of the future plan to really grow the entire ecosystem.
Yeah. So another way to say it, investors in the Ethereum ecosystem need to be more patient because the plan is working out, even if ETH has had some sideways price action for a while now. So moving forward here, um, we talk about stablecoins pretty much every month. It continues to be the killer app. What's interesting here, Tether obviously still being the most widely used stablecoin, even as overall global stablecoin supply is back near all-time highs around 160 billion. It's good to see that growth. Again, sort of a slow year, I would say, in terms of real crypto growth. A lot of it, as we've been talking about for months, has been driven by macro and new ETFs, not actually on-chain flow. But the growth of stablecoins has been real. But what's interesting about that, if you go to the next slide, is that again, talking about ecosystems that are thriving. On to the next slide, please. Going towards ecosystems that are thriving, most of the Tether activity is actually on Tron. So again, we've talked about Base and other L2s on Ethereum. We've talked about Solana. We have talked about Telegram, and now we're talking about Tron. So, each of these different layer one protocols are finding different areas of success, right? Solana finding it with meme coins and DePin. Base finding it mostly with meme coins as well. Telegram finding it with click to earn apps, and of course Tron finding it now with stable coins. So really is sort of, I guess, overall a good thing to see all of these different sort of ecosystems thriving. Obviously, there's plenty of other layer one protocols that we didn't even mention that have various levels of success. But I think these are the big ones, at least that we're seeing from a data standpoint. Is there anything we missed here, Joey?
No, I think that's pretty comprehensive overall.
Okay. So moving ahead here, kind of to each of the individual apps and maybe some of the more individual investment opportunities. We mentioned the stablecoin growth. You can see here just Tether and Circle are just absolutely killing it from a profitability standpoint. The difficulty as investors, of course, is there's no real way to invest in just the growth of stablecoins. You could buy Coinbase stock, but this is sort of a small part of Coinbase's overall growth. Circle, obviously a private company, has been trying to go public for 3 or 4 years now to no avail. But you can see that the amount of money these companies are making is just insane, right? I mean, essentially, most of global finance is built on float, right? Who can actually earn the interest while you're holding on to the assets? Well, stablecoins hold on to it the entire time and pay out none of the interest to the people using it. So just a massive opportunity as rates have risen. But if you go to the next slide here, as we're starting the Fed rate cut regime, the Fed cutting 50 basis points last month, has an off month here in October, and then resumes again after the presidential election in November, expected another 25 to 50 basis points at the end of the year. That will certainly continue to reduce the yield a little bit for Circle and Tether. So, we'll see what kind of overall effect that has on the market when two of the biggest companies in the space start to have decreased profitability. Again, not an easy way to invest, but something certainly that has trickle-on effects to everything else. But away from stable coins, and I think this is where we're going to spend the next 7 or 8 slides here, trying to think about, okay, if we talk about all these layer ones and layer twos that are driving overall ecosystem growth, there has to be real apps that are generating a lot of this activity. And we mentioned Aerodrome already as the DEX on Base. Where else are we seeing some kind of growth in applications across any of these different, let's be more chain agnostic for a minute. Just in general, what are you seeing here with regard
Yeah.
to
So in the DeFi space, you're seeing borrow lend, you're seeing decentralized derivative dexes, which we'll go over in a second. You're seeing DePin really taking off. You're seeing gaming starting to take off. Payments with stablecoins is also a huge part of crypto. I'm trying to think what dexes, normal dexes for swaps. I don't know if I'm missing any. I'm definitely missing a couple others, but that's like a pretty good comprehensive overview of kind of what's going on in the space right now.
So let's start with the decentralized derivatives exchanges here. I think most people probably have always associated decentralized derivatives with maybe synthetics or DYDX, but that's not the case anymore, right? You're seeing some real competition, some real growth elsewhere.
Yeah, so this is from this new platform called Kaito, which pretty much tracks mind share across the entire ecosystem. So it takes from Telegram, from Twitter, from Reddit, from websites, and it pretty much creates a score on how much people are talking and thinking about different ecosystems to kind of give us insight into where the puck is moving. And Hyperliquid, which is a new DEX or decentralized derivative DEX that's trying to mimic a centralized exchange, is really taken off in the last year or so to be the dominant DEX or decentralized derivative DEX across crypto.
Yeah, and if you what's interesting here is moving to the next slide here as well, volumes are starting to grow again on chain. But specifically, and in fact we didn't put this chart in here, but if you go to the blocks dashboard, if you look at decentralized exchanges that are trading spot, right, trading actual tokens themselves, that number actually continues to grow in the sense that the decentralized exchange to centralized exchange spot volume percentage is up to about 13%, which is almost an all-time high, pretty close actually to an all-time high in terms of the ratio of volume being traded on chain relative to on centralized exchanges. Some of that because obviously some of the centralized exchanges like FTX have gone away. but certainly starting to see real growth. And that is the things we talked about, like Uniswap and Aerodrome and others. But on the decentralized derivative side, even though there is some growth there, still just massive relative to centralized derivatives. Only about 1 to 2% of the volume. So places like Binance and Deribit still dominating this space. So, do you see, some of the growth here in Hyperliquid or others that are going to actually really take off here, like we've seen on the spot side?
Yeah, I think you're only going to see more and more people using decentralized derivatives as they become more like reliable and easier to use. You used to have to kind of sign transactions every single time you wanted to trade, but with Hyperliquid, it's one-click trading and there's no wallet approvals to interrupt your flow. So like the UI UX improvements are becoming drastic compared to like 2 or 3 years ago, and those UI UX improvements are really leading to more and more people trusting and using these decentralized derivative exchanges.
Yeah, also interesting to note, we mentioned DYDX's fall from grace. Not only is this one of the worst performing tokens of the year, down 70%, but the founder had quit and ultimately just this morning announced that he's coming back as CEO. So maybe feeling that pressure, realizing that, after DYDX basically stole $400 million to their own coffers away from token holders and had their mini vacation, maybe he's going to come back and try to do some things that help token holders here. So we'll see. Obviously, you can see how fast things can change and how you can fall from being the almighty to basically being irrelevant relative to others. So moving away from some of the derivatives exchanges here, prediction markets being something that everyone is talking about. This is a little hard one for me in the sense that prediction markets have been around for decades. This is not new to crypto. It's hard to know if this is really a success story because of crypto or if it's just because of the election. This just got lucky and hot hand at the right time. But there's no doubt that Polymarket is just dominating prediction markets. You can see the growth here. This is something that I really want to come back to in 6 months to see if this is still real after the election, because we've seen a lot of these flash in the pans around US presidential elections that then kind of die off afterwards. But it does feel like some of the volume on here is starting to move away from just binary presidential election bets and into some other areas like sports and even some macro data. What are your thoughts here? Maybe you being 20 years younger than me, having a little more fresh take on this versus me having seen this fail for 2 decades.
Yeah, I think this is a lot to do with like the rise of gambling culture. Like with gambling and sports gambling becoming legal across like half the US states, more and more young people are beginning to speculate on different areas, and this is just another form of gambling in my opinion, and it's just become very easy to now you're able to gamble and get different lines on presidential elections, on wars, on every different part like industry that you couldn't get before without just like making a handshake bet. And I really think it's just like happened to be at the right place at the right time, and the rise of gambling culture led to this kind of really taking off at this moment.
Yeah, I think that's probably right, right? I mean, a lot of, it's no shortage of success stories that are, 10 years after the first one that came about and just, right place, right time. So, shout out to Polymarket. They're doing great. On the next slide here, though, potentially there was a competitor out here built on the Solana ecosystem called Drift. At times it was viewed as maybe, again, we talked about how do you play the growth of base when there's no token, and Aerodrome is the best proxy. Well, how do you play the growth of Polymarket when there's no token? Well, maybe Drift was the best proxy. We saw the Drift token go higher for a bit, but pretty meaningless, volumes in terms of what we're seeing on Polymarket, right?
Yeah, it's very, very small, and there's only a couple of markets really open. Drift, on the other hand, is a pretty good decentralized derivative DEX, and number 2 or 3 kind of across the entire crypto ecosystem. So, the token and most the actual value of the token is more associated with the decentralized derivative DEX and their new bet product.
Right. Okay. Moving ahead here. I don't even know what you put on here. Tell me what is
Yeah,
it? Oh,
I was just showing that this is really like gambling and that this is from Polymarket, that every wallet I can track like realized profit by wallet, and most people are losing money on Polymarket. So it's just another form of gambling.
Yeah, and that makes sense. Like you said, I mean, the gambling culture has taken off. It's not just on sports and in casinos now. You're seeing it everywhere from, daily options, trading all over Wall Street, especially on places like Robinhood. So not surprising. But again, I think, this is a good reminder to ourselves. Let's come back to these same charts in 6 months and see what they look like. after we get past the election to see if this dies off or if there's going to be, continued betting and interest on these platforms. So moving ahead, getting into maybe more specifically to the Solana ecosystem here, even though we said we'll be more agnostic per chain, a lot of the, memes and DePin, as we mentioned, are being built on Solana. Pump.fun, for those who don't know, walk through, what you're seeing here and why this is relevant.
Yeah, so this is entirely part of the rise of the meme coin economy being built on Solana. Basically, Pump.fun is a token launch platform where all you have to do is put in a picture, the ticker, like a short description, and pay very small amount of money to launch a meme coin on Solana. And it creates a bonding curve. And once that enough people buy the bonding curve, it automatically launches on Radium. And this is how most of the meme coins on Solana were being launched, because you didn't need to know how to be a developer. You didn't need to know any code, and all you had to know how to do was connect a wallet and put in a ticker and a description. And because of that and how easy it made it, Pump.fun became the fastest to 100 million in revenue of any protocol across crypto from the inception of crypto, basically.
And it's pretty amazing. We talk all the time about why we own the Bitcoin miners, that, independent of whether you believe in Bitcoin or not, there are real companies like the miners that are taking advantage of Bitcoin's growth. It's the same thing, whether or not you believe in, meme coin sustainability. Pump.fun is generating real meaningful revenue and profits, taking advantage of that growth. So, I think it's sort of a weird phenomenon in the sense that memes are everywhere. It's not obviously unique to crypto. You can just look at AMC stock or GameStop or Bed Bath and Beyond and see the same thing in the equity market. The difference is the equity market overall is huge and people have known it for hundreds of years and they're able to kind of compartmentalize and just dismiss the weird kind of meme culture happening in stocks. Whereas in crypto, it's kind of overtaking and distracting in a lot of ways from some of the I don't want to say real, because not that memes aren't real, but maybe more of the products that are being built in DeFi and gaming and DePin and other areas. But again, the revenues are real and the interest is real. I'd venture to say that some of this is regulatory, in the sense that there have been some real good protocols and products built in crypto that are just not able to basically dividend out that revenue back to token holders right now because of regulatory issues. And some of it is probably from greed. A lot of the venture capital firms in this space, and a lot of the founders in this space, and certainly the complicit exchanges and market makers who keep listing these tokens, have really failed the retail community, right? By just having incredible greed and listing these tokens at insane valuations that just go straight down. I've been on record. Arca has a liquid crypto hedge fund. We don't buy any of the new issues on Coinbase or Binance because they go straight down. There's a horrible capital markets process that happens. And as a result, retail has been burned too many times by these VCs, these founders, these exchanges, and these market makers. And they're going to a place where that's basically not part of the equation with these fast rising memes. So shout out to them. Love when retail makes money at the expense of institutional investors. And again, similar to Polymarket, we'll see what kind of long-term sustainability this area of the market has. But certainly these revenues are real and the volumes are real. Moving ahead here to the next couple slides here. DePin, certainly one of the sectors, stands for decentralized physical infrastructure networks. This is probably one of the more broader sectors, in terms of every project you see in the DePin world is really tackling something totally different, from, mapping, similar to Google Maps, to, shout out to Hivemapper, or like Helium working on mobile networks, or LivePeer, or looking at videos and Filecoin and storage. I mean, there's a lot of different areas of DePin. What are you showing here, though? Like, how do you think about it when you look at all these different elements of the DePin space?
Yeah, I think what this is really showing is like some of these DePin projects have physical devices. Like in IONET, you actually need physical GPU chips. In Helium, you actually need hotspots. In Demo, you need a car. In Hivemapper, you need a dash cam. Versus in LivePeer, it's just video over the internet. Or Grass Protocol is just AI data over the internet. And they're kind of two different things. Like decentralized physical infrastructure, originally the whole use case was with the P and physical, and that it really was only this right side of the chart, and the left side of the chart's more like data oriented protocols that kind of get looped in. But the real like long-term use case of real DePin, in my opinion, will integrate a physical product.
Yeah, and I think that's important to go into the next slide here. So one of the physical products that we've been talking about it and writing about for a while is HiveMapper. For those who don't know, HiveMapper is essentially trying to recreate Google Maps. So you buy a device, you put it on your windshield, and as you drive your normal routes, it starts to, map. No different than when Google sends out their cars with the cameras all over them trying to build the mapping. The difference is Google has to pay their own employees or their own cars or self-driving cars to map it, whereas HiveMapper is basically outsourcing that to individuals. And obviously, there's 7 billion people in the world. So if you outsource this to more and more people, you're going to build that network way faster, right? Helium doing something similar, as you mentioned, having people put mobile hotspots throughout the world just in their own homes. So really, what you're doing is you're creating this incredible incentive system. What I always talk about is like imagine if like all of a sudden the government said everybody who builds a bowling alley will be subsidized. And all of a sudden, be like, oh, well, if it's free to build a bowling alley, I'm just going to build it. And eventually, if there's enough bowling alleys, maybe bowling becomes the most popular sport. It's sort of similar, right? If you are incentivized by earning tokens for putting your HiveMapper device in your car or by putting your mobile hotspot Helium device in your house, eventually that might, be because you're building this massive supply side first. Eventually, it might turn into that massive demand side. And you can see it on HiveMapper here. We could put any of the DePin projects in here and show similar growth. But HiveMapper specifically, this is real growth, and it is so easy. I mean, we bought a bunch at Arca and started putting them in our cars. I mean, I drive 150 miles every weekend taking my son to baseball games. I'm earning honey tokens. Within 6 months, I'll probably earn back the initial investment of putting the HiveMapper device in my car, and it took 3 minutes to install. So there are real products here happening. It's not just meme coins. There's real interest in some of these projects. And I think we'll see if you get more and more of these success stories as we head into next year and beyond. I think on the following slide here too, just looking at the retention, this is probably the most important, right? And when you look at any sort of new technology or new product, it's not just can you get them in the door, it's can you get them in the door and stay. So the fact that people are essentially putting these devices in and mapping and continuing to do it shows that this really is working. Anything to add on HiveMapper specifically or anything across DePin?
No, that was a pretty good overview. I would just say there's a lot of different like cool areas of DePin, like GeoNet and Helium and a lot of others that are really small and most people don't know about. But I think this will be one of the biggest growing sectors of crypto over this cycle.
Yeah, I think so as well. So, this is a lot. I think we're bumping up on time here, so we'll probably end it here. But, I think the takeaway is, for most of the last 6 months, we've been forced to talk about macro because it really has been driving price action. But this was a nice, healthy kind of refresh of what's really happening in the weeds of individual protocols and applications built on these protocols. There really is a lot going on, and it may not be translating into price yet, partially because there's still a lot of damage from 2022 with investor psyche. Partially because some of the tokens have high inflation and just aren't matching the growth of the actual product. Part of it is, as we mentioned, a lot of these projects don't even have tokens. There's no real way to invest in it. And part of it is just a lot of investors are sidelined until we get through the election. My personal opinion is, regardless of who wins, even though I think Trump is probably viewed as more pro-crypto, obviously, than Harris, regardless of who wins, once there is an actual elected president and once there is a peaceful transfer of power, you're going to see markets across the globe go higher, and crypto is going to be no exception. So hopefully, in pointing out some of these nuances within the ecosystem, some of the things that are happening in crypto gives you as investors thoughts about where you want to focus your time and energy, where you might want to invest. And obviously for accredited investors and qualified buyers, we certainly have a lot of funds at Arca that will give you exposure to these growing areas as well. So that's it for this month. Joey, thank you as always. Don't know where Nick Holtz is. He usually joins me. I think he's wandering the universe by foot. We'll see if we ever see him again. But Joey's back with us this month. We'll be again next month. Thank you again, Sumana, for putting this together. And thank you all for listening. We'll be back again.